Namaskar, welcome to my YouTube channel. Let me start by saying a few words about my own background. My name is Sweetie Shaha. My student ID is 2212037133. Today, my presentation topic is overview on the last monetary policy declared by Bangladesh Bank. The Bangladesh Bank unveiled its monetary policy statement for January to June 2024, adopting a contractionally stance to address persistent inflation and instability the foreign exchange market. This policy aimed to balance inflation control with economic growth, ensuring financial stability aimed global and domestic challenges. Provide a summary of the monetary policy. Key highlight of the January to June 2024 monetary policy. First one is inflation management. Inflation target. The Bangladesh Bank set an inflation target of 7.5 from FY 2024 up from the previous 6%, acknowledging ongoing price pressure. 2. Interest rate adjustment. Policy rate, repo rate increased from 7.75% to 8% in January 2024 and further to 8.50% in May 2024 to curb inflation. Starting deposit facilities rise from 5.75% to 6.50% in January 2024 and to 7% in May 2024. Starting and lending facilities adjustment for 9.75% to 9.50% in January 2024, then increased to 10% in May 2024. Exchange rate policy crawling pace system. Fourth, credit growth and money supply. Provide sector credit growth. Target reduce from 11% to 10% to control inflation pressure. Both money growth. Fifth, liquidity management. Interest rate corridor. And six, support for productivity sector. Refinancing facilities. Continue support for agriculture, export, include third refinancing line to promote growth, enhance activities. Economy outlook. The Bangladesh maintain a caution approach, balancing the need to control inflation with supporting economic growth. The policy measure aim to establish the foreign exchange market, manage liquidity, and ensure credit flow to productive sector. The introduction to the Trotline pay system and adjustment in interest rate for signify step toward achieving these objectives. Mention significant change compared to the last policy. The Bangladesh Bank monetary statement for January to June 2024 includes several significant changes compared to the previous policy period, July to December 2023, reflecting a more constitutionally approach to address persistent inflation and establish the foreign exchange market. Key changes in the January to June 2024 monetary policy. Policy interest rate adjustment. Policy rate, repo rate, increased by 25 base point to 8% from 7.75%. Steady deposit facilities rise by 75% basic point to 6.50 from 5.75%. Standing lending facilities reduced by 25 basic point to 9.50 from 9.75%. 2. Private sector credit growth target. Previous target 11 versus revised target 10%. Third one is introduction to cloth line base exchange rate system. Implement a cloth line based system to manage exchange rates, validly linking the Bangladeshi taka to a bucket. Fourth, interest rate corridor narrowing. Fifth, removal a smart based interest rate cropping. Sixth one is discontinuous and table of practices. In seven, enhance support for productive sector. This adjustment in the January to June 2024 monetary policy reflect Bangladesh Bank commitment to controlling inflation and establishing the financial system amid global and domestic economic challenges. Tool used by Bangladesh Bank in Monetary Policy 2024. Bangladesh Bank uses a mix of direct and indirect tool to regulate money supply, control inflation, and maintain economic stability. The major tool include the first one is policy rate, repo rate, policy rate. The interest rate at which commercial bank borrow money from Bangladesh Bank used to control inflation. Reserve repo rate. Standing deposit facilities. The rate at which bank deposit their surplus fund with Bangladesh Bank. 2. Open market operation. Buying and sending the government securities to manage liquidity in the banking system. The third one is statutory reserve requirement. CRR, cash reserve ratio. SLR, statutory liquidity ratio. Fourth, interest rate corridor. Fifth, exchange rate management. The sixth, moral situation. Seven, selective credit control. Guideline or restriction won't loan the specific sector or ensured credit flow into productive area. 8. Refinancing and pre-financing semis. Bangladesh Bank provide low-cost fund to bank for lending to targeted sector. This tool are adjustment based on the current economic situation to ensure price stability, stable growth, and financial discipline in Bangladesh. Suggest policy reform on Bangladesh Bank. From a student understanding, several reform could help uh, strengthen the effectiveness of Bangladesh Bank monetary policy. Strengthen inflation targeting. Bangladesh Bank should adopt a clear and transparent inflation targeting framework, setting a specific goal and communicating them clearly to the public. This will increase confidence and help inflation expectation. Second, strengthen exchange rate flexibility. While the crop-line base system is a positive step, Bangladesh Bank can move toward a more market-based exchange rate. This will be improve foreign exchange stability and attract more investment. Third, enhance financial inclusion. Fourth, improve transparency and communication. The Bangladesh Bank should regularly publish economy forecast policy, assumption, and clear explanation of policy decision. Fifth, develop a strong secondary bond market. Active bond market will help Bangladesh Bank manage liquidity from effectively taught open market operation and reduce direct borrowing from banks. Six, digital transformation. Promote reform to a strength digital payment system, data collection, and regulation. This can improve efficiency in monetary transmission and financial sector stability. Seven, capability building of bank. Commercial banks follow best practices in credit risk management efficiency when interest rates are rising. Conclusion. This reform will make Bangladesh monetary policy more modern, effective, and resilient in global and domestic economic challenges. Thank you all.